This video will explain how to prepare the investing activities section of the statement of cash flows. The investing section includes investments. Acquiring certain assets is an investment. If you bought a house to live in, isn't that an investment? Same thing with companies. When they buy property, equipment, and land, they are making investments, even if these items are used in operations. This section includes acquiring and disposing of investments and PP&E, which stands for property, plant, and equipment. It also includes lending money and collecting loans. These aren't our loans where we needed the money, but loans that we're giving out to others. This includes investments in bonds, and other investments could be investments in stock. Some specific examples include cash inflows from selling intangible assets, selling plant assets, collecting principal on notes receivable, selling long-term and short-term investments, and selling notes receivable. Some examples of cash outflows are buying intangible assets, buying plant assets, loaning money in return for notes receivable, and buying short-term and long-term investments. When it comes to what we add or subtract in this section, it will not work the same as the operating section. The investing and the next section, the financing section, do work the same. If cash has increased, you would add that amount. If cash has decreased, you would subtract that amount. For example, if I invested money in purchasing stock, my cash would have decreased because I bought the stock. Therefore, I would subtract. We need to look at the balance sheet, specifically in the long-term assets section. We can also use the additional information section to corroborate our information. We're still working on the same classwork problem as the last video. However, I will be completing the investing activities section this time. In this example, there's only one item that will go in the section. Remember, we need to look at the long-term assets section of the balance sheet. So let's do that now. Looking at the long-term assets section, there is only one item here, which is equipment. The equipment account has increased by $8,400 from last year to this year. What would make this account increase? The only way would be to purchase more equipment. Otherwise, it would have just stayed the same, or it would have gone down if we sold some. We do need to look at the additional information because even though we've received equipment, it could have been a non-cash transaction if we exchanged it for something else or issued debt in exchange. When we look at number 3 in the additional information, it states, purchased equipment for cash in 2018. No equipment was sold in 2018. This lets us know that the equipment was purchased for cash and not in exchange for something else. In the investing activities section, we will write cash paid for equipment. It was $8,400, but is this amount going to be added to or subtracted from this section? I always ask myself the question, what is happening to my cash? Or what's going on in my bank account? If I purchase something, then aren't I spending cash? Yes. If cash decreases, we will subtract that number. We then add everything in the left-hand column up and put the total on the right-hand column, which is very easy in this case because there is only one item. We would just write the negative $8,400 in the total section for the investing activities.